Tax rules quietly change every year, but in 2026, the biggest piece of tax legislation in a decade actually took effect: the One Big Beautiful Bill Act, or OBBBA. By the end of this video, you'll know the 5 OBBBA changes that hit your wallet, who benefits the most, and what to actually do about it. Here's the headline: the average American household will see a tax cut of about $611 from OBBBA changes, roughly a 0.8% boost in after-tax income. The biggest changes hit the SALT cap, the standard deduction, the child tax credit, and a brand new deduction for tip income and overtime pay. Some are permanent, some snap back to old rules in 2030. Knowing the difference matters. Quick context. The One Big Beautiful Bill Act was signed into law on July 4, 2025. Most provisions hit your wallet starting with the 2025 tax year. That's the return you file in early 2026. The Act made the 7 federal tax brackets permanent: 10, 12, 22, 24, 32, 35, and 37%. And it created several brand new deductions for working Americans worth knowing about. The 5 OBBBA changes that hit the most taxpayers. Number 1. The 7 federal tax brackets are now permanent, with extra inflation adjustment for the lowest 2 brackets in 2026. Number 2. Standard deduction goes up. For 2026, married filing jointly gets $32,200. Single filers get $16,100. Number 3. The SALT cap. State and local tax deduction cap quadruples from $10,000 to $40,400. This is huge if you live in a high-tax state. Number 4. The child tax credit goes from $2,000 to $2,200 per qualifying child. And number 5. Brand new deductions for tip income up to $25,000 and overtime pay up to $12,500. This is a major win for service workers and hourly employees. The SALT cap change deserves its own moment. From 2018 to 2024, the state and local tax deduction was capped at $10,000 total. Starting 2025, that cap jumps to $40,400. For someone in California or New York with high state and property taxes, that can mean $3,000 to $5,000 in federal tax savings per year. But here's the catch: the higher cap snaps back to $10,000 in 2030. It's a 5-year window, not a permanent change. Same family, 2 scenarios: a married couple in California, household income $250,000, 2 kids, $30,000 in state and property tax. Under the old SALT cap of $10,000, they could only deduct $10,000 of that state tax. Under the new SALT cap of $40,400, they can deduct the full $30,000. Combined with the higher standard deduction and the bumped child tax credit, this family's federal tax bill drops by roughly $3,500 per year. Through 2029, that's not pocket change, that's a real difference for a real family. 3 things to actually do about this. 1. If you live in a high-tax state, do the math on itemizing this year. The new SALT cap might make itemizing beat the standard deduction for the first time in years. 2. If you earn tips or overtime, talk to your tax preparer about the new deductions. Up to $25,000 in tips and $12,500 in overtime is now deductible if your household income is under $150,000. 3. Remember the SALT, tip, and overtime provisions phase out by 2030. Plan accordingly. The next 4 to 5 years are the window to take advantage. Tax law changed quietly but significantly with OBBBA. SALT cap quadrupled. Standard deduction up. Child tax credit bigger. Tips and overtime now deductible. Some changes are permanent, others are a 5-year window. The right move depends on your specific situation, so talk to a tax professional. But at least now you know what changed.